Welcome back to the Property Frontline. Today I'm here with Scott Hoaxang in our Market Watch series. Hello, Scott.
Hello, everyone.
And today we're covering off the Australian property market data to 30th of November 2024. In this episode, we'll do a deep dive into the three main data centres, so CoreLogic, SQM, and also PropTrack, as we normally do. And we'll talk about the differences that have occurred in the past month. Then we'll also cover off the topic of the government schemes, given that the Federal Labor Party has had a recent win of actually getting their Help to Buy scheme through Parliament. Alrighty, so let's get started. Okay, so as usual, what we're doing is we're going to cover off, as I said, the three main data houses, and we've combined that information onto one chart. So, Scott, can you take us through the CoreLogic performance?
Sure. Starting with first column on the left, we've got our capital cities listed and monthly growth rates. Sydney down 0.4% for the month of November. Melbourne down slightly more than that at 0.5. Certainly what we're hearing out in the marketplace, matching that. Moving into what we'll call our BAP markets. Brisbane up 0.6, still rising. Adelaide up 0.7 for the month. And our leader for the month is still Perth, up 1%. Moving down to some of the smaller second-tier markets, Hobart was down slightly at 0.1%. Darwin up a bit at 0.3%. And our friends over in the ACT and Canberra up 0.2%. Sort of combining that all into a national number. The market's basically flat, but it's not really a stat that we pay a lot of attention to. Because of all the differences within the markets.
Yeah, and we should also mention that this is for houses, not full-on combining units as well.
Correct.
Right, okay, so on to what SQM Research puts their numbers at. So Sydney, they say, is down 0.8, Melbourne down 0.9, Brisbane up 0.9, Adelaide, a real jump of 2%. Perth, just slightly back by 0.3. No change in Hobart. Darwin up a little bit, 1.5. Canberra up, which is like really unusual, 2.9. I'm so negative about Canberra. Anyway, and then nationally, SQM has the performance at just 0.4%. And I guess the point we always make about SQM and why they're so different to CoreLogic over PropTrack is that they're tracking asking prices, not actual sales. Is that what you understand, Scott?
Yeah, exactly. So it might be more of a forward leading indicator for Sydney and Melbourne. We potentially may be seeing some vendors not pricing their properties as high, sort of coming to the market.
Interesting. Okay, and so do you want to take us through the PropTrack numbers?
Sure. We'll roll over to column 3, which is our friends at PropTrack. There's always a lot less volatility in their index, I have to say, and we don't see larger swings in their numbers. And we're going to see that again this month. Sydney up 0.1%. So a bit different than what the other indexes are telling us. Melbourne down 0.1%. Again, not nearly as much volatility as we've seen from CoreLogic and SQM. Brisbane up 0.3%. Adelaide up 0.4%. Perth up 0.3%. So it seems to be saying growth is slowing in those three markets from what we've seen. Hobart up, interestingly enough, 0.5, sort of a bit of an outlier there. Darwin is flat, Canberra 0.3, so pretty close to flat, and their national number is pretty well in the middle of the two at 0.2%.
Yep, okay. And so this was recording the changes just month on month. But what we're looking at now is the prop track annual changes, but for dwellings, so houses and units. And so I'll just quickly point out what's going on here. So looking at all capital cities, prop track says that over the past 12 months, rolling 12 months, there's been a general increase of 5.6%. Sydney up 4.6%. Melbourne cumulatively over the last 12 months is now finally back 1.6. And when I say back, I mean negative. And then Brisbane up 12%, Adelaide up 14%, and Perth, the absolute winner, at 18%, and Hobart 1.3%, and Darwin up 2.3%. So really, that is a big number to go back like that for Melbourne. I mean, we have seen it coming for the past 12 months, but yeah, anyway. Is there anything you want to add to that?
Just a note on Melbourne, which I did think was interesting. One of the data providers said house prices had fallen there 10 out of the last 12 months. So it has been quite a consistent fall there, not just kind of something that's happened recently.
But just by a smidge.
Yeah.
Alrighty, so they're the numbers. So the other things that are happening that are driving the market, we picked this up because we covered it in our last discussion. So this is a quote from SQM where they noticed that the total listings for November came in at 272,000, but the rise was driven by older listings, so properties that have been on the market for more than 30 days. But what we think is a really forward indication of what's going to happen and absolutely true to form of the Australian property market. So what SQM research says is that the rise in old listings was somewhat offset by an unusual 0.4% decline in new listings. So basically what's happening is property owners are seeing that the prices are slowing, and so they're starting to go, oh no, I won't put my property on the market. I'm going to wait now because I'm going to gamble that there's going to be an interest rate drop in the next, say, 3 to 6 months. So I'm just going to wait until that happens, and I'll put my property on the market when that happens. So what will happen is that there'll be a decrease in supply and buyers will have less choice, so they'll drive the price back up. And so it will be a market correction of its own free will. Do you have any comment on that, Scott?
I would say I basically agree with that. It's faith in the long-term future of our property markets. And also, I think a lot of cashed up people in Sydney who probably have the luxury of not having their backs up against the wall and sit there and wait around for a better time to sell. I think we really that's why we just never see any large decreases in this market, because people will pull their properties off the market and simply wait for a better time for it to rebound.
Yeah, and that does raise the point about the difference in the two big markets that have had their prices starting to drop. So in Sydney, I would say that the drivers of people wanting to list their property were personal choices. So, it's just time for them to maybe upsize, or, maybe like they're redistributing their portfolio or they're retiring, whatever. But in Melbourne, it's a very structural sell-off. So it's actually statewide, and So it's not a personal choice. It's driven by the changes that the government have introduced. So changes to ownership legislation and also the land tax changes that the government has introduced.
Adding to that, the tenant legislation, which has left landlords exposed to difficult tenant situations, which can put you in a situation of wanting to sell, having a tenant damage a property or not pay rent for a period of time.
Which is tricky. Yep. So taking a look at this chart, given what we were just talking about, Scott, can you give us a bit of an overview of what this chart is showing us?
Sure, Deborah. This is a jam-packed chart full of data, let me tell you. So the bars are showing how much listings are up versus their 5-year averages. And looking at those first two bars, we see Sydney and Melbourne. We've got a lot of stock on the market in those two cities versus the last 5 years. So you've got more choices, which is sort of the point you are making.
Yeah.
Those little dots within the boxes show where that data was at 3 and 6 months ago. So if we went back 3 months ago to the orange/red dot, it's the number's only about half that high. 6 months ago, it was even lower. So that really means that increase has happened very recently.
Yeah.
And then we sort of move on to Brisbane, Adelaide, and Perth, and it's the exact opposite. There's just not as much stock on the market there as has been for the past 5 years. A lot fewer sellers. There was even less stock on the market 3 and 6 months ago. Our little dots are actually below the bars. So that kind of implies there's a little bit more coming on the market, but we're still nowhere close to what that long-term average has been.
It really does highlight the importance of available listings and the impact it has on pricing. Yeah. So on to our topic for today, which is the government schemes. We have thankfully got pretty much all levels of government. Even local government is offering some incentives and relaxation for home buyers. But at state level, over the past few years, we've had an increasingly more generous amount of support for home buyers. So it's usually a mixture of stamp duty exemptions, so where you won't have to pay any duty to actually purchase the property, and also purchase grants. So that's like a cash injection, depending on the type of property that you would buy and the amount you wanted to spend. Now, I see a lot of people, and I'm sure you do, Scott, who really try and get as much as they possibly can out of the government schemes. And what the message we want to give out today is really what you need to do is think about your own situation and what can you afford, where do you want to buy, and why do you want to buy before you start tying yourself up in gaming what scheme you might want to use, because what you don't want to do is run after, say, a cash injection, meaning that you might have to buy, say, a new property that's not in an area that you want to buy in, where if you forgot about the 10,000 cash injection, you might be able to buy an existing property that would cost you less and that would be in a better location for you. So really, like I see people just getting themselves all tied up in all the nuances of the opportunity, where really they just have to start from what they have and what they're looking for and then make the grants work for them. Do you have any insights to add to that?
I think just to add a bit of color, it limits you to a selection of properties. So if your universe of what you can buy is this big giant pie, if you go into that saying, I'm only going to buy something that gets me grant X, you might be looking at only 5% of all the properties on the market, and in New South Wales, the numbers are so low on the price thresholds, it rules out any houses at all. So do you really want to be forced into buying a new unit, Or do you want to be looking at that whole universe of properties out there, including houses, have more choices and areas, and hopefully you'll end up with a property you'll be happy living in for a longer period of time as well. The last thing you want to do is buy something you don't like and go through a sale and rebuy, incurring double transaction charges. So
exactly, that's very well put. Yeah. And now onto the range of government schemes. So the federal government has been introducing a lot of different options. Once again, we do see people get confused about what works for them because they're quite nuanced about what scheme will work for what person. But the reason why I wanted to discuss this today was the new Help to Buy scheme that Labor has just been successful in putting through Parliament. Now, I used to be one of those people that would go, really, like, how crazy? Why would you want to buy a property and have the government own part of it? And so you would put in all the maintenance, you're responsible for, you know, all of the invoices and everything. And then when you sell, the government gets 40% of whatever the uplift is. But really, that's the wrong way to think about it. These schemes are designed for people who, without the help, may never be able to buy a property. And so while there's plenty of people who would knock this scheme, if you're a renter and the only way you've got the opportunity to buy a property is through something like this, where you only have to pay 60% of the purchase cost, well, then it's a great scheme. Do you have an opinion on that, Scott?
Along the similar lines. I mean, for a single parent with kids who maybe had a house in the past or just cannot afford to buy anything in market, the opportunity to stop paying rent and buy even a small property, a small townhouse or something in the market, and having the upside of that 60% share grow over time, they're going to be better off 5 or 10 years out when they sell, even after paying the government out versus had they rented. So it really, for a certain percentage of the market, it really is a very good program for those people that can take advantage of it.
Yeah. And so we heard the opposition housing minister speak a couple of weeks ago, and he was saying that only 10% of the opportunities had been taken up, but about 90% of people are missing out on, you know, going down this path. And really, I think the reason why people aren't doing it is just that the government needs to explain it more. They need to be able to help take people on the journey. And so the government should put some, like, along with, you know, the grant, they should be showing people how to do it because, or even communicating to the people who are long-term renters that this program is available. It seems like it's just in the market.
Yeah, I mean, for us to even to have gotten the details, we had to Google, you know, the programs and go digging deep, you know, in to find statistics. And I didn't even find a simple fact guide or anything like that.
Yeah.
Hey, it is early days, so maybe let's give them a little bit of time. And I think they will focus some of the education on the mortgage brokers, because these people, if you do turn to a finance mortgage broker and you're asking them about buying a property, hopefully they will all be, you know, up to speed and educated on these federal loan programs and co-equity schemes. And I think that's your point up there as well, which is got to make sure that there's going to be a loan suitable for these people that works with the scheme.
But what Michael Zucker was saying was that the state schemes, the state Help to Buy schemes, that they had been in place for over 12 months and there'd been very low take-up. And really, it's just a matter of, like, it's not even targeting mortgage brokers. It's targeting tenants who think that they might never be able to purchase a property, that they should actually call their mortgage broker and say, you know, what other opportunities. And didn't you say, Scott, that you looked at the pricing limits, and that in Sydney, like the top price cap was 950,000?
Yeah, that was on the New South Wales state program, at least.
Oh, okay.
I don't know if they have released all the price thresholds on that national program yet. But if they do end up being up in that range for, Sydney, Newcastle, and Wollongong, I mean, that does open up a lot of, townhouse opportunities, or, the markets you're looking at potentially,
Yeah, houses.
an old house out in Western Sydney or Southwest Sydney, right?
An old house, a house with opportunity in Western
House with
Sydney.
opportunity.
That's right. Well,
Renovators delight.
The way Sydney's expanding, soon that will be like a major city. But anyway, another topic for another time. Anybody who's listening, if you know some real long-term renters who think that they may never be able to buy, tell them about this scheme, because it's highly likely they might qualify. And here's the bad news. There's only 10,000 opportunities per year, so you really don't want to drag your tail. Really want to get in there and take some action.
But it's only bad if they're all used up, and at the moment they're just sitting there. So.
That's right, just sitting there.
First come, first served.
And sorry, what was that? I didn't hear.
Oh, sorry. First come, first served.
Yes, that's right. As always, proceed with caution. It does require a team of good advisors. So start with a really good mortgage broker. You might even be able to engage a buyer's agent and have some help with that. And if you do need some help, there's always our Buyer Success Program that people can use. And note that you will need a really good solicitor or conveyancer. But if you do want more details, you can contact us. Thanks very much for joining us today. If you would like to know about any next sessions, make sure you subscribe. In our next session, we will be covering off the topic of land tax and the reason why it's important for you to know about the land valuation of any property you're thinking about buying. Anything else I need to mention, Scott?
Just wish everyone a very happy and safe holiday season.
Holiday season, yes.
Lots of festivities. Well, Merry Christmas to everyone. Let's say that as well.
Yeah, let's say that as well. And everyone be nice to each other. Let's stop, colouring each other's cars and things like that. But, okay. So thanks for watching. If you would like to contact Scott or me, our details are in the content section below. All right. Thanks a lot.
See you all in January.